TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart we're going to look at today, of course, is our German DAX, as we usually do. As you can see on this chart, that we've been in a relatively pretty wild trading range between 12,000 on the downside and 11,000, on the downside, 12,200 on the upside. But it still made new highs. That's the important thing. Now, let's take a look yesterday, what we were watching with the E-mini S&P. We'll switch over to that because we got a few things to cover today, and we'll take a look at this. You'll notice we made that big ABCD expansion down there at the 1.618. We made a double bottom there at 23.18. We've now rallied back. This was as of the rally was going on. We want to continue on to see how the rally finished. And if I would put up the right chart, that would be no problem at all. And I think this is going to be it. Here we go. Put this up here. You'll notice that the rally that we've had now has been pretty much equal to the last rally that we had in mid-March. This one stopped also at the 61% retracement. The exact number was 0.63, which means it was a point and a half off. But it was very, very similar in time to the last rally that we had over the previous month. Now, we've got something going on here because I am hearing my little beeper go off, and I don't know, it's probably Treasury bonds is my guess. But no, it is the potential for the British pound here. We might be making a change in trend in the British pound, folks. If we get much above the 125 level, I would think that we're probably going to get a rally extending maybe a little bit longer, but not too much. As a point of reference, we are going to have that grain report tomorrow. That comes out with about an hour. I think it comes down around 10 o'clock Eastern Chicago time, right in the middle of the market. So you'll know what the report is saying by the time the market simulates what the data is. But it'll be interesting no matter what, because this will be the start of it's the start of our planning season with the farmers saying what they're going to be looking at. Now, I had a gentleman here this whole week that is one of the largest farmers in the world. He has, he's got over 500 farms. One of them has over 248,000 acres that they do everything for the farmer. They get his money for him. They tell him how to plant it, when to plant it, how much fertilizer to use. It's all done on computers with numbers. It shows what his crop is going to be, how much he's going to make at the bank, when he should hedge it. It's such a business, folks, that you just, it's not like the old days back, when corn was trading, 4 cents for a weekly range. It's a big business now. And so it's really exciting to see these numbers, how they all line up to fit together for a business plan, because it's all numbers. They just go to the bank, and they own a couple small banks, and they just literally rubber stamp these, because as soon as the thing is done, they plant and then they hedge the crop, and the farmer starts getting his money. And so it's really a business. I always knew it was a business, but not that big a business. I mean, it was really something quite spectacular. And actually, Sai's going to actually join us on the webinar Tuesday evening, when we're going to discuss the crop report with Rich Anderson and give some options ideas and trading ideas for the coming growing season to our subscribers for 24/7. So if you get a chance, it would be something I think that would be pretty interesting. These fellows know the options market backwards and forwards, so that'll be a very interesting thing to see unfold, because they really play the options market. They don't play it, they work it, very astutely. So that's another thing to be watching. Okay, back to this S&P. You'll notice that we hit the 61% retracement last night at 2361. We backed off about 7 handles from that. So I believe that we're probably just in a little backing and filling area here. We didn't really go crazy to the upside, folks, like we have in previous times of looking at some of these things. And if we look at some of the stocks that we follow, in particular in the banking section, if we take a look at what Goldman Sachs did, you can see, Goldman Sachs has gone from 256 to 220, folks. It's dropped $36. That's well over 15%, and just a little 382 pullback would take it up to 233. That would be up another $5. But this is a bearish stock. Remember, this is the most influential stock in the Dow Jones, because it is the most highly priced. Even being down this much, it's still the most highly priced. So it's going to be interesting to see, how we want to take a look now. We've had a request to look at the crazy Qs. If you give me a second, we'll get it up here. Here we go. And you'll see here, I figured you were going to ask this morning, so we'll put it up here to take a look at it. And you can see here, we did make a new high. That's our third high since, actually it's our fourth high that we made since the beginning of March. That completes a ABCD pattern going back to late February. It also completes a smaller one where we pulled back to a 382 retracement after we banged up against that 61% retracement. But we've gone into new high ground. Again, and each time we've done that, you've seen we've dropped a lot. So it's going to be a $64 question if we do the same thing this time or not. We're not seeing this overall bullishness in anything other than the NASDAQ, folks. The Dow Jones doesn't look that way at all. So all of those are telling us that we're looking at a situation where the market is starting to roll over, and we're starting to see, certain signs of weakness coming up. But that's just a sign. That doesn't mean that that's what's going to happen. It's just a sign of what's going on. But it is a strong sign. And remember, we've got all of these gaps here in the Dow Jones to fill. We've got 2 more to go to the downside in order to fill it. And then when that happens, then we have to reassess whether the market is going to go along. Now, yes, I realize we've got Apple and Amazon in the NASDAQ, and that's what's pushing these things to the upside. But that's nothing new. We've been watching that for a very long time. There's about 25 stocks in that NASDAQ 100 that does all the damage. Your Netflix, Amazon, Google, Apple, those are the ones that are really rocking and rolling. So, but the rest of the market is not actually doing that. So we'll watch that. Okay. Someone's asked a question about the IBB, and that's already topped a long time ago. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we are going to take a quick look at the German Bund. As you can see here, we are completing a 61% retracement of the move down. That encompasses the rally that we've had since the Fed raised rates again, and now we have reached that 61% level where we should start to see the rates go back up again. We're seeing the same type of thing in the Treasury bonds. In fact, let's just take a quick look here at the Treasury bond here. Just give me 1 second to get the chart up so that we can take a look at it. I wanted to show the banking index first because it has a profound effect on these financial instruments also, especially when we're looking at the Treasury bonds and Treasury notes. But if you look at the banking index, we're seeing the same type of movement that we've seen in Goldman Sachs, only this one was able to rally up to a 38% retracement yesterday. They did it without the help of Goldman Sachs, but you'll notice that that did rally. It took several days to get to that level, but this is going to be interesting here because this has a very bearish connotation in this banking sector, which was the market that went up the most of all of these things. So keep a close eye on that one, folks, because it's going to be really interesting. Now let's go down and we'll take a quick look here at the Treasury bonds first, because we're in the midst of this rally here. I believe we're very close to the end of the rally. Let's just put the chart of the bonds in first so we can take a look at it. But you'll notice here that after we made that 61% retracement, now this is a weekly, so we're in the third week of a rally. We've only been able to get up to the 152 level, 152.03. That makes the third lower high over the past several weeks. That's going back into the first of the year. So this is not a very, very bullish chart. it means that interest rates are probably going to start showing up in the Treasury bond market, much like they have, since May of 2016 when we made the, big butterfly pattern, up in that area. So this is something that we need to watch now, because if this starts to roll over, we are looking at long-term interest rates going a lot higher, folks. There's no question about that they're just spot on, ready to do it. But again, we'll have to see if this is going to be a situation where it's actually going to continue over a long period of time. And I believe that it is, because we've only had, two interest rate increases in the past 9 years or something. I mean, that's a ridiculous amount. I mean, that's really nothing going on. So it looks like rates are going to go higher. Now, if we get above the 153 level, then all bets are off. We're probably going to rally some more. But the way the chart looks right now, we've had a pretty good breakdown, and now we've had a pretty good rally, and now it's starting to roll over a little bit. Now, a lot of this might be related, to what's happening, especially the last 2 days, what's been happening in the foreign currency markets, because we had this situation in the euro where we were making a big ABCD pattern, and we actually, just 1 second, we'll get this up here to complete it. You'll see here that we'll get it up here. This is as of Friday, because I haven't updated it this morning. I'll update the euro in just a second, but we did get up to that ABCD pattern. Now we've backed off considerably here in the euro, folks. As you can see here, over the last several days, starting with Monday, that we've had a pretty big drop in the euro versus the U.S. dollar. We've gone down from the 109 and change level all the way down to 107.40. So that's 160 pips. That's right at the harmonic number for the long-term daily charts. 170 is the harmonic number in the euro. So if this euro is any good, it's going to find some really good support here in this area of 107 to 107.30 would be my guess. And that's also going to be a 61% retracement of the move down. Now, it's taken several days to do it. That's an ideal situation. So this is the day where I would be possibly looking to see if the U.S. dollar versus the euro is going to come into some pretty strong support. That's what I would be expecting at that particular time. Now, one other thing that we need to, let's just get back here to the U.S. dollar, because I think that's the one I want to spend a little more time on this morning, if I can find it, and that's the $64 question. Shucks, let's just put this euro up to show you. I'll get the dollar index. I know I've got it here because you can't really take a look at it. You'll notice here that we're coming down to this 107.20 level. We're trading at 107.28 right now, and we would be really close to this place where you had broke out of previous highs and then came back and tested it. That's usually a sign of really strong support. That'll come in at the 61% retracement, which is down around the 107.20 level in the euro. So that's one that I think would be relatively important to look at. Now let's get to the big daddy rabbit, which is, of course, the dollar index that encompasses all of these different cross rates. I believe there's 22 of the 27 different cross rates available in the Eurozone and stuff. So anyway, this is the dollar index. As you can see, we did make a 78% retracement here on Tuesday. And now we're, excuse me, that was Monday. That's when we hit the 109 and change in the euro. And now we're in the midst of this rally that should stop today, just a little above the 100 level, if it is in fact really bearish. Now, if it is really bullish, you're going to see a move above 101 very quickly in the dollar index, and that would push the euro down below the 107 level, down to 106.50 or something like that. And that says that big ABC that we just finished on Monday in the euro is all you're going to get, and now you're going to start to see the dollar start to strengthen again against these markets, and that would be very interesting, because usually that will mean that the gold is ready to have some type of a move. But wherever, that's a very good thing. Polar is a competitive devaluation. That's another way of saying a trade war, because that's exactly what these countries are going to be doing, because they have to protect themselves, of looking, at a certain place, just one second, I lost my train of thought. That would be a place where you'd actually draw the line in the sand, and because if it gets above that 109.50 level, now you've got legs, and now you could still see this dollar index get down to the 97. I still haven't given up on it, but now this is a real critical time as we come in here to Thursday and Friday this week to see what's going on with these particular things that we're watching right now. Okay, so that's another thing that we want to keep watching. We're going to have a little commercial coming up here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we were talking about the euro and the fact that it's approaching the 61% retracement after making that ABCD pattern at the 109 and change level. It's a very important number there, folks, at that 102.20 in the futures. Let's try it again, 102.20 in the foreign exchange. And those of you that trade futures, that trade the futures at the CME, Chicago Mercantile Exchange, that's really the smart way to do it because you're saving a great deal of money. The reason why there's a difference between the price on the futures and the price on the foreign exchange is that the CME is actually a futures contract. It's a valid contract. With the foreign exchange banks, you're basically just trading their contract size against their positions. And believe me, they take, when you put a position on, the foreign exchange bank that you're dealing with takes the other side of it because they have so many people trading that they know that about 80% of those folks are not going to come out to the promised land. So it's easier for them to do that. Only a few times do they ever not take the other sides of those trades. It's usually a very, very large trader that has a pretty good track record of being correct. But anyway, let me explain to you why the futures is so much better. In the foreign exchange markets, they use the spread as the commission. So it's usually in the foreign exchange with the euro that trades for about, say, roughly $10 a tick, they have a 2-pip spread, so that's $20. So that's your, if you buy on the high side, and if you sell on the low side. That's how the spread works. Now, that's a $20 spread. Now, you can go to the CME and trade the futures and actually, put your limit order in at a certain price. You can do that also with the euro, but you're probably not going to get filled very often. But the pip spread doesn't make any difference when you're trading the futures because they charge you a round trip of about $4.50. So the difference between $4.50 and $20 is $16. Well, if you're interested in saving 75% of your commissions, that's the way to do it, is to go to the CME. And they work really well. They even have options that work pretty well too. But if you're going to trade, a couple $100 million, you're not going to be able to do that. But if you're a small trader, and most of us are, you can trade those futures, and I trade both. I trade both the futures and the others. It depending upon which future it is and where it is at the time. And of course, I don't trade into reports and stuff like that. So we'll see what's going on with these things as we go through the morning. But very important support here in the euro, coming down another 20 pips or so. It's going to be very interesting to see if it holds that level. We'll watch that. Now, we started to sell off in the bonds this morning, which I was a little disappointed. I really wanted to see the bonds, and the markets disappoint me a lot, folks. But I really wanted to see the bonds get up to that 151.20 level. That was a 78% retracement of the previous day, and I wanted to be able to see if that was going to be the case. Now, a few minutes ago, I talked about the British pound, starting to move. We've just moved another 30 pips higher in the last 5 minutes. That means to tell us that we were within about, only with about 20 points of the 61% retracement of the whole down move, and that means that this euro could be getting near the bottom. I know they're not the same, but they trade the same market. So people that trade the pound usually trade the euro, so keep a very close eye, on that. Another question someone's brought up is about the gold market. The gold has held up, pretty well. We've come down only about $11 off the high. That's usually all you're going to get. We hit 1243.70 this morning. So that's probably all we're going to get on the gold here if this is correct. I mean, we've actually been coming down for several days now. This is actually our 4th down day, and we just made a 50% retracement of the low that we made way back on 1228. So gold's got a chance to rally here. Your risk here is only a few dollars because it stopped right at that. There was a beautiful ABCD pattern. What I'll do is when the break comes up, I will, the fact is I might be able to do it now, but I know I can do it when the break comes up because it's a really nice Gartley pattern that is formed here that shows a really nice pattern. Let me hold it. This is very interesting now that I'm seeing it clearly. Hold on. There we go. This will only take me a second to get it into the room, and then we'll be ready to go. I hope. And hope is always a positive. We made it real easy this time. Okay, here you're going to be able to see the gold. Now this is a 15-minute chart that we're looking at here in the gold. And what you can see here is you can see the ABCD moves that we've had since the 26th when we made that 1261 and change level. Now we come down. Well, we didn't even come down $11, did we? We 61. Yes, we did. What are we talking about? We came down 61 to 43 is 73, isn't it? Wow. Yeah, it is. It's $17. We came down $17. Wow, that's even more important because that's one half the harmonic number. 61, 51. Yeah, that's right. Okay, so that's going to be interesting here. Keep a real close eye on this gold today, folks. That could have been a pretty good bottom. Should get at least $1,100 to $1,200 rally in gold from that level. So as long as we don't get below the 1243, this would be valid. But below 1243, then you would not want to be open it. So we'll see if this is going to be the case. Let's check and see how the market is. What's going on here today? We should be in a little bit of a down move here, folks, just based on the fact that we made that 61% retracement in the E-mini S&P. We only made a 50% retracement in the Dow Jones, but we did make new highs in the Nasdaq. But again, the Nasdaq is, starting to sell off a little bit from that level. So we'll keep a very close eye on this because I believe we're still in a downtrend. Nothing's really changed. Our good friend Shane Smolian from wolftrader.net has told me yesterday in an email that the Fed is still not turning on the juice, that there's virtually no Fed intervention here at these times around 10:30, 11 o'clock. So that still tells us that we still have a bias, to the downside. We're not off a lot, but we're off enough that it's starting to realize that it has to struggle back to make new highs. Now, it didn't have to struggle in the Nasdaq, but folks, remember that's only a few stocks. I mean, you're only talking a few of these really big stocks, and that's all you need. You need an Amgen at 800 and something, an Apple at approaching 150. And some of these others, I mean, Netflix. I mean, these things can really do some rocking and rolling. That's the main thing, to keep in mind. So anyway, that's what we've got going on here. I hope that helps with that currency explanation, because that's a good way to save money is by using the futures instead of the foreign exchange. Foreign exchange is a fabulous market to trade, folks, and it's actually even very fair. And as you get larger in foreign exchange, you don't even have to worry about the pip spread because they'll give you a half a pip spread, so you're only paying like $6 or $7. 877-927-6648.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I wanted to bring up this chart of April hogs again. Now we're getting ready to go into April, of course, on Saturday, the April Fool's Day, and you will most probably want to look at the June hogs. It's making the same pattern, but this April hog that we've been watching for quite some time has been pretty much textbook. Now, the reason why I'm posting it in here, yes, we have a USDA hogs and pigs report on Thursday. That is today. And then we also have tomorrow, we have the big planning intentions report. So both of those are really big. I wouldn't go into these reports with position. The reason why I'm showing you this, get down to the basics again, why I'm showing you this particular hog chart is because in Gartley's book, Profits in the Stock Market, he said the best trade to look for is to wait for a market that is bottomed, and then you buy the first ABCD correction that you see. And this is the first major ABCD correction that we've had in the hog since we bottomed in October. And if you'll remember, in October, we had Rich Anderson on, and he was telling us that the hogs were below the cost of production. And what did they do? They immediately rallied over 30 cents a pound, much like what cattle did, because cattle rallied almost the same amount because they had broken all the way down to that 107 level, making a 3 drive to a bottom pattern, and since rallied up to the 120, 122 level. So this is what we're looking at as we go through some of these charts. So let me quickly look here. We're getting a little bit more of a rally now in stocks. That's what we'd like to see. So we'll keep a very, very close eye on this as we look at some of these things that we're watching. Now, we just hit the fib number in the British pound. That came in at 25.25. We're trading at 25.13 right now. That should be all you're going to get in this market now for the British pound. So if you're looking at something for a low risk sell, that 125 level in the pound should be pretty strong resistance, based on the fact that we've been up there several times and then backed off and supported it. So the main thing is, the other thing is if you'll keep an eye on the crude oil. We just backed off about 50 cents in crude oil, but we're coming down to this really interesting support at the 49.75 level in the crude oil. So sort of watch that and keep an eye on those British pound. These are short-term patterns that we're looking at, but they have a tendency to pay off to the tune of a couple $100 here and there. So that's why I bring them up for your attention, also for educational purposes, because you can't do everything all the time. Now, as far as resistance in the E-mini S&P, we've already talked about the fact that 2361 level was a 61% retracement off the previous high that we made in mid-March, and it was a 50% retracement of the high that we made back on March the 1st after the meeting that they had with the the address to Congress is what it was. So watch that, very, very closely also. But we should have some relatively strong resistance in the S&P around between 2358 and this 2361 level. But above the 2361 level, you'll be looking at something altogether different as far as being bullish or bearish. I think if it gets above the 2370 level, you could be looking at run to new highs, much like what we had, with the NASDAQ. I remember, but the NASDAQ is not really a fair market, folks. You're looking at 20 high-priced stocks. So, if you want to trade, and have fun and watch your blood pressure go up and down, the NASDAQ is the one to do it because it moves quickly. You move an $800 stock, $3. That's a whole lot. So keep in mind that's what you're watching. It's much easier, to trade the E-mini S&P because it doesn't have some of that. Well, not nearly the herky-jerky motion that you have with the NASDAQ. I mean, the NASDAQ is just it's crazy. I mean, it's if you get it at extremes, it's a big winner. But boy, if you don't, look out. It's going to be a real interesting one to look at. But anyway, the E-mini S&P, keep an eye on it between 2358 and 2360. That would be the area where I would think you would start to see some possible reaction to the downside. Remember, it's best to wait to the first hour if you could, because that's really the way to do this as you start to see this unfold. Okay, now let me see what else we need to talk about. Okay, let me see. The euro, we're trading at, we got down to the, we hit the 107.18 level. We did. We got down to that 61% retracement after all, 107.18. We're now trading 107.40. So this might be all we're going to get in the euro. We'll have to give it a little bit more time, to take a look at it. As far as the gold, we've had a pretty nice rally this morning. After we hit that 12.43, we rallied up to $7. The 12.50, that's nothing more than a 61% retracement of the high we made yesterday. So in order for gold to get moving, we got to clear the 78% retracement, which is up another $5 at the 12.53 level. So those are the ones that I would be, most interesting to watch. Now, those of you that have been following us in the wheat, we exited our week at our break-even point. We had a small profit in it. We got out of it at our break-even point, which was 436, and the reason for that is it's suicide to go into these crop reports, especially a planting intentions reports, even though the wheat will be least affected of any of the things, more than beans, oil, and corn. The wheat will not be affected by it, but it will still be affected just because of these mutual funds for commodities. They move in unison many times when a report comes out, and that's it. But what we're going to try to do is we're going to try to focus on the extremes, much like we did last year when we had a crop report like this. We were setting over some major buy signals, just like we are now. And we had a very, very negative report that lasted to the tune of about 30 minutes until they read through it and said, this is not nearly as bearish as it appears. And from that, we rallied for well over 6 months into the growing season, topping in July of that year. So remember that these things have a tendency to make a bottom down in these areas, and then you have a pretty good thing. Well, we got a caller from Boston. Jay, are you there?
Yeah, good morning, Larry.
Good morning.
Hi, a couple of brief questions for you. Number one, there's an ETF called HOGS, H-O-G-S, and I'm wondering if that's a sensible way to play HOGS. And I don't have a futures account, that's why I asked.
Yeah, it's not bad. It's a good way of doing it. So I would think it is. Yeah, a lot of people are saying yes. I don't like ETFs, but there's several people in the room that use that, and they say that it's good. So if they say it's good enough, it's good enough for me, because the people in that den are, as you know, pretty straight shooters. So I think that's pretty good. We might have to pay a commercial here, but stay with me. But even after the commercial, stay with us, because you wanted to talk about gold also.
Yep, that's right.
Okay, we'll take a little break. We'll be right back with you, Jay. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're speaking with Jay in Boston, and we were talking about hogs. And let's get back to hogs for just a second. Jay, watch this, please, because there's a cattle on, pigs and cattle report today, and you don't want to get involved with this particular thing. We'll look at it tomorrow after the reports come out, and that'll give us a better idea. But the only reason I put that hog chart in there is because it has all the parameters that Gartley talked about for something to being bullish, but he didn't talk about going into crop reports. So let's leave that one alone. As far as the gold, We did get a good rally. We needed to get above. We needed to get above the 1253 level. That would clear the 78% of the last down move, and then we've got a chance for some more legs to the upside. But there's pretty strong support today at that 1243 level.
I was going to ask you about the physical, because the U.S. Mint is telling us that over the last year, February 2016 to February 2017, physical sales of gold down 67% for the Gold Eagle coins, and for Silver Eagle coins, 75% down. I mean, that's a real collapse. Yeah. What's the smart man going to draw from this as a conclusion going forward?
Don't listen to the government. I'm pretty close to those markets, and believe me, I don't believe those statistics, because when you go into a coin place to buy it, you have to wait to get the coins. I mean, they just don't have them in stock like they used to. So I don't agree with that, down 60 or 70%. That's just my opinion from a very small sample size of dealing with some people. That's not what I'm hearing. So I would say I would worry too much about that. I mean, and the prices are not reflecting it. Look how much we've come up. We've come up from $14 to $18. That's a 30% move in silver. We've moved up about 15% and 20% in gold. That also doesn't support lower prices, does it?
No, it really doesn't.
Yeah, see, that's why you sort of have to question it. Hey, thanks for joining us, my friend. I appreciate it. And spring is coming. Stay warm.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.